Strategy B now holds a mind-blowing 713,502 Bitcoin. To put that into perspective, that is 3.4% of all the Bitcoin that will ever exist. They are literally swallowing the entire market, vacuuming up the supply shock while the rest of the world is sleeping at the wheel. While the mainstream media tries to scare you with headlines about their reported $17.4 billion unrealized loss, real investors know the truth. That loss is nothing more than an accounting technicality, a paper tiger designed to shake out the weak hands. Strategy B ignored the noise, looked at the board, and bought another 32,470 Bitcoin in just the last quarter alone. This is the absolute definition of diamond hands. They are not trading the chart. They are buying the network. But here is the metric that changes everything, the one number that Wall Street simply cannot wrap its head around. They achieved a massive 22.8% BTC Yield in 2025. You need to understand what this means. This is basically an infinite money glitch. It means they are increasing the amount of Bitcoin backing each share of their stock faster than the actual supply of Bitcoin grows on the blockchain. They have engineered a financial machine that accretes value regardless of the fiat price action. They raised a colossal $25.3 billion in capital in a single year just to fuel this engine. Think about the demand that creates. They are printing fiat securities to buy the hardest asset on earth, effectively shorting the dollar to go long on the future. And if you think the political winds are shifting, you are absolutely right. Their presentation explicitly names Donald Trump as the Bitcoin president and outlines a comprehensive plan for the US to become the Bitcoin superpower with a strategic Bitcoin reserve. We are talking about government-level adoption here. This isn't just a company strategy anymore. It is a blueprint for national sovereignty. They have built a digital fortress with $2.25 billion in cash reserves just to cover dividends for years, ensuring they can weather any storm. And their net leverage? It is sitting at a tiny, manageable 10%. That means they have massive room to keep leveraging up, to keep issuing convertible notes, and to keep buying more. They are already crushing the Magnificent 7 tech stocks and gold with a 58% annualized return, and their high-growth models predict a potential 2.5 times increase in Bitcoin per share by 2032. Do not let the volatility shake you out of the trade of a lifetime, because Strategy B is not just a company anymore. It is the world's largest Bitcoin treasury, and they are just getting started. However, we have to address the elephant in the room. Bitcoin right now is not undergoing a simple, organic correction. What we are witnessing is a fully coordinated manipulation event, and I have the undeniable on-chain receipts to prove it. While everyone else is just staring at the red candles and panicking, they are missing the only thing that actually matters. The flows are screaming that this entire move was 100% manufactured by the whales to liquidate your longs. Look at the data right now. It is undeniable. Binance moved over 85,000 Bitcoin. Coinbase Prime dumped over 50,000. And then Wintermute joined the party to move billions of dollars in a synchronized attack. We just witnessed $20 billion worth of Bitcoin move in a matter of hours. That is not normal market activity. That is not retail selling because they need to pay rent. That is a setup designed to trap you. They intentionally push the price up fast to lure you into high leverage, triggering massive FOMO. And just when liquidity was thin, just when confidence was at its peak, they slammed the market down to trigger a cascade of forced liquidations. They are farming you on the way up and crushing you on the way down, executing a perfect trap to steal your liquidity without a single news headline. This is a ruthless game of whales versus retail. It is asymmetric warfare. If you aren't watching these on-chain movements, you are trading blind against institutions who view this market manipulation as just business. They see your stop losses as their liquidity. They see your liquidation price as their entry point. I called the October all-time high, and I'm telling you now, this is a trap. Wake up and watch the flows. Do not hand over your coins to the very entities trying to shake you out. This brings us to what Anthony Pompliano just revealed. Pomp highlighted that Bitcoin is essentially in its IPO phase right now. We are witnessing a historic handoff from early retail adopters to massive Wall Street giants. Look at the volatility. It has dropped from 80 down to 40. That is not boring, that is bullish. That compression is exactly what institutions have been waiting for to finally enter the game with serious capital. They cannot deploy billions into an asset that swings 20% in a day, but as that volatility dampens, the floodgates open. And while the mainstream media screams about inflation, the real data proves that deflation from artificial intelligence is the actual wild card. AI is driving the cost of intelligence and production to near zero. In a deflationary world, central banks have only one move: print money. Rate cuts are coming to fuel the fire. This pause we are seeing in the market isn't a sign of weakness. It is ownership changing hands from the impatient to the strategic before the next legendary move up. Do not mistake this for a dip. Bitcoin is quietly transforming from a speculative playground into the backbone of global finance. It is becoming the pristine collateral of the internet. You do not want to be left behind when the next leg starts. Even Jim Cramer, yes, that Jim Cramer, just sounded the alarm on the most dangerous trade in the market. He explicitly stated that if you are betting against Michael Saylor, you are playing with fire. Cramer went on air and dubbed the MicroStrategy boss the Malcolm X of Bitcoin, declaring that he is coming for the short sellers with absolute resolve. This is a massive warning to anyone doubting the Bitcoin strategy. It signals that the mainstream now understands that Saylor is willing to do absolutely whatever it takes to win. We are looking at a potential short squeeze of epic proportions. Imagine a scenario where Saylor uses every ounce of leverage, every dollar of that raised capital, to drive the price up and leave the bears with nothing. Cramer says Saylor is not just a CEO, he is a man on a mission who will not be stopped. Betting against him is a losing game. The message is simple: do not fight this man. He has the conviction, the capital, and the relentless drive to defeat the shorts and send the stock to the moon. Are you ready for what comes next? Because it looks like Saylor is just getting started, and the shorts are standing on the tracks of a freight train. And finally, if you needed any more confirmation, the $4 trillion banking giant JP Morgan has released a monumental report declaring that Bitcoin is now officially even more attractive than gold for long-term investors. I know gold is up 60% while Bitcoin plummeted nearly 50% since October, but analysts say that is exactly why this is the opportunity of a lifetime. They call it a massive valuation reset. The volatility ratio between the two assets has hit a historic low, which implies Bitcoin is becoming stable just as the price hits rock bottom. But wait until you hear the price target. Based on this new data, their models show a theoretical long-term value for Bitcoin of $266,000. While everyone is chasing gold at all-time highs, buying the top like typical retail, the smart money sees Bitcoin's discount as a rocket ship ready for blastoff. This divergence is rare. It is an anomaly. Analysts believe the entry point now offers way more upside than gold, which might be totally overbought. Do not sleep on this. If they are right, we are looking at gains that could create generational wealth.
Thanks for watching. If you found this helpful, hit that like button and subscribe for more.